Welcome back to the Microlearning Institute. In today's short tutorial, we're going to introduce some principles of IAS 2 inventories. Inventories include assets held for sale in the ordinary course of business. These assets include raw materials, which are materials and supplies that are consumed in production, work in process, which relates to assets in the production process, and finished goods. These are items that are for sale in the ordinary course of business. IAS 2 excludes certain inventories from its scope. These include work in process arising under construction contracts, and this topic is dealt with under IAS 11, construction contracts, financial instruments covered by IFRS 9, and biological assets which are covered by IAS 41, agriculture. The fundamental principle of IAS 2 states that inventories are required to be stated at the lower of their cost and their net realisable value. The cost of the inventory should include all the costs of purchase, including taxes, transport, handling, net of trade discounts received. The cost should also include all the costs of conversion, including fixed and variable manufacturing overheads. And finally, the cost should include all other direct costs of bringing the inventories to their present location and condition. When calculating the cost of inventories, we should exclude any abnormal wastage, any storage cost, any administrative overheads unrelated to production, any selling costs, any foreign exchange differences arising directly on the acquisition of inventories invoiced in a foreign currency, or any interest cost when inventories are purchased with deferred settlement terms. Net realisable value, on the other hand, is the estimated selling price in the ordinary course of business, less the estimated cost of completion and the estimated cost necessary to make the sale. Any write-down to net realisable value should be debited as a P&L expense in the period in which the write-down occurs. Any reversal of this write-down should be credited to the P&L in the period in which the reversal occurs. And that's the end of our introduction to IAS 2 inventories.